1993 with WSCPA, and there's a lot has happened since then. So we're going to do a fast flight over the area of sustainability accounting. And this is the first of 2 parts to this course. We could not do a 2-hour course for this prefix version, but there will be a second half. And in this class, you're going to get the handouts for both pieces. But you'll want to come back later and see the second half because I'll be narrating it with my own experiences. So very briefly, I got my undergraduate degree in marine biology at Harvard, and then I got an MBA and a master's in environmental studies at UW, at the University of Washington. I went on to work at the Washington Department of Ecology, where I ended up becoming a leader in this area of business cost accounting for environmental management, since I was the only person in the place that had an MBA. Everybody else was an environmental engineer. I went on to work for international agencies around the world and became a professor in 2 universities, teaching both environmental management accounting and operations management, just basic operations. And after many years of that, I decided to take matters into my own hand to improve the world and started some companies making turbines for rivers and the ocean. And now I'm back into the business of sharing my knowledge with the world. So we have, to do this, we've started a new company called Sustainability CPE. It's a new Washington corporation. Our goal is to teach CPE for credit for accountants. There's a lot to cover out here. Everybody's now focused on this, it seems. We're happy to partner with the society, and we're going to start off with running the classes with the society here in Washington, featuring all Washington content, including case studies and guest speakers. And then we're going to take that out to the rest of the world. So we're looking forward to your input on this to make this product better as we move along. My goal today is to get feedback on the course, find partners to review and improve it. And you can sign up at sustainabilitycpe.com to be an official content reviewer. And we also want to help the society understand how diverse this product, this concept is, and how it can really benefit many aspects of the accounting profession. So very briefly, you've heard the rules. It's a 50-minute presentation with some Q&A. You can download the materials and the show. And this show is both parts 1 and 2 in the PDF. I'm only narrating part 1. And there's a chat box. We'll respond to your polls. And our goal here then is to cover the first half of the overall piece. And that's the origins and insights on where this stuff comes from and why it's real. And then who and what are the main players, and what are they publishing, and what does it mean? And finally ending up, how can you use that to be a sustainability leader? In the second half of the course, which is going to be on October 7 at the WSCPA website, you can register for it. We'll be doing a hands-on hardcore dive into the metrics and using restaurants and other simple industries as examples. So come back for the second half. Now, putting this all together was interesting for me because 1993 was a long time ago. And that's when I did my first class on this. A lot has happened since then. And so in the last several months, I've been reviewing all the literature, well, as much as I can get my hands on about this. And so to help you, I've created a catalog of 125 of what I think are the best, most accessible, and free for download publications. Each of which has a small description of what they're about and keywords that allows you to sort them in an Excel spreadsheet. And this is what an expert in this business in sustainability accounting is going to be reading. And we'll be coming back to a lot of that material. Out of the 125, I've picked 7, not 125, 7, to put into your zip file in the downloads area. So you don't have to go look them up yourself. So there's a tremendous amount of real published literature behind this, and I'm glad to be able to be here to show it to you. So who cares about this stuff? Well, if you're an accountant and you're working for a big firm, all of the big firms have now got sustainability practices. And it's a fast-growing area for consultancy and advisory, and also becoming hot for assurance because now people are publishing more, companies are publishing more reports, and assurance from third parties is very important. Obviously, companies that are CPAs that work for small and medium businesses, and that's many of you watching, just I'm guessing from your email addresses, a lot of Gmails and Verizons, et cetera, and not corporate IDs. So if you're working with small businesses, this is going to be really, really helpful because you'll be able to help them understand very quickly what the risks they're facing are in sustainability and how to fix them. And it's going to be very practical. Of course, internal CPAs and organizations and management accountants are all part of the picture. But what I really want to emphasize here, how many other organizations and stakeholders care about you knowing this material? Because investors are very focused on it. Sustainability metrics are now at the top of the impact investing how-to list. Lenders and insurers are concerned about sustainability as the COVID is proving very nastily. Regulators care about compliance, and the community is concerned about risks. Consultants are out there trying to help you with their own business models, but they need to know sustainability too. Activists and nonprofits want to know that you're doing well, and they'll give you awards and other helpful things. And of course, students, and this is a really hot point, in terms of getting the work done in sustainability, you can use students in accounting schools to do some of this work with you because they absolutely love it. To them, this is the future. This is the way it has to be. This is the capitalism they want. A thinking capitalism where they can be good accountants and work for money and also make the world better. So the learning objectives, I'm going to put a bunch of them up here, but I'm not going to read them out to you. We're going to go over the why this is happening in the first place. It's an evolution of a lot of other content. And then we'll talk about the what, which is the organizations and the key publications they've come up with. And then we'll do some of the how to use these tools in a quick overview. And this is going to be a high-level flight. We're going to get down into the tools in the next class. But you can go back through this later on and just check to see if you managed to pick up on the main points. So the first we're going to start off is what the heck is sustainability and who says? Who's got qualifications to talk about this? Well, the United Nations has been working on this for a good 40 years. And sustainability only became an actual phrase in practice around 1995. And after that, the question was, well, how do we define it so it doesn't just cover everything in the world and then we don't know what to do? So the short answer is that they created 17 sustainable development goals. And this is done with immense participation around the world, with governments and corporations and communities. And each of these is a key area where improvement is going to be critical for the future for our world and our civilization. So out of these 17, some of them are very business-like, like clean energy, and others are a little bit more complicated, like gender equality. So one reason this is an important set of pictures to understand and to learn more about is that when you're sitting down with a client of any kind, you can show them this diagram and ask them, of these 17, are there any in particular that really make their heart beat? Some people will say, I see gender equality, and that makes a huge difference to me. Others, for example, might see climate action as their thing. That's what they want. And others are focused on education. The reason it's important for them to know about this is each of these 17 has a global community around it. And if you know which number is yours, like my number is number 5, there's millions of other people that want to help on number 5, and you can find them with this kind of coding. But let's talk about what it means to business first and then to accountants, because there's another group that's taken that same thing. Now, first of all, the International Federation of Accountants, IFAC, is one of the big players in this business, and all of the national accounting associations belong to this group. AICPA in the United States belongs here. And they have published an article on on accountancy and the Sustainable Development Goals, getting right into what are the goals that are most relevant to accountants. And they've come up with 8 of them here out of 17. So they are not trying to cover the world. They're trying to cover the things that matter to accountants. And their logic for picking each one is good. I can see some debate about them, but I recommend highly that you begin by reading this because it's very helpful to get a big picture and know where you can fit in better. And this is, of course, in your downloads that you're going to get today. But what is sustainability for business? I mean, we just talked about the planet and 17 goals, some of which, well, there's 8 of which are relevant to accountants. Well, here we go. So the Sustainability Accounting Standards Board is now one of the 4 big players in this space. It was created about 15 years ago, and using a very long consultative process, they asked this question: what sustainability factors in business are most relevant to investors and are therefore most material in terms of public reporting if you're a public corporation? Their definition of materiality is, does it matter? Is it financially relevant? Is it normative? And is it consensus based? Is it actionable? Can you do anything about it? And is it open to innovation? And so that is a way to definitely narrow down all those many millions of things we should worry about. And they came up with 5 major action areas of concern: environmental capital, social capital, and natural capital. And then leadership and governance, and business model and innovation. And this is what they're calling their universe of sustainability issues. And they're being specific about it because they're writing standards for each one of these 25 elements here. Each one of them has its own guidance now. And they're covering 77 sectors. So when you're with a business client of any kind, you turn to them and say, well, let's talk about your sector. And then you can look up one of these sectors and see what are the parts that matter. How convenient for us, huh? So when we talk about sustainability accounting, and we're talking with a business organization, well, any organization, but not with a community or a government, this is a really good way to start the discussion because it puts boundaries around it. And we don't end up drifting off into conversations that can't help the business. So our goal in doing all this is to make sustainability normal. And the only way it'll ever be normal if it provides data that shows up in 2 documents, the profit and loss statement and the balance sheet. If it doesn't show up here, it's not happening in the business, to be really clear. It's got to be visible, otherwise executives can't take action on it because they don't see the metrics. So what I've done here, and this is an old product from 2003 actually, where I've taken a standard P&L statement and I've opened up the categories to reflect a lot of things that are now indicators of sustainability, but we tend not to put into our statements. So on revenues, this is kind of fun. There's profit, and then there's profit from sustainable products as defined by maybe a label. And did you make any revenues from selling renewable energy from the solar panels on your roof, and from selling waste as a byproduct, and from getting free money from grants? A lot of small businesses in particular are just oblivious to the amount of free money they can get from utilities to improve their operations. But keep in mind, for example, if there's no category for free money, who's going to remember to go get it? So making these things visible is critical. And what we've done here is added some other columns. For each one of these factors, there are metrics, and these refer to the Global Reporting Initiative I'll tell you about later. And this is what the metrics mean, each of these categories. And the key thing here is that the Global Reporting Initiative, using these codes, has created technical accounting metrics, formulas, to measure all this stuff. And so when you're getting out there to work with people on accounting, you can say, this is how you measure that factor. And if it becomes strong enough, if it's a more important enough an issue, they'll get busy on it. Now, the same application can be done to the balance statement. Okay, so we've got assets and liabilities, and again, blowing open each category to capture those sustainability factors. And a really easy one is facilities, buildings. Okay, so we have a number on our balance sheet, the value of our building. But if we own a lot of buildings, how many of them are green? How many of them are LEED certified? What's the value of them? If you don't see them on the balance sheet, will you care? And wouldn't you like to see on the balance sheet that the value of green buildings you have is going up every year? So this is, again, how to communicate it. And I'll just finish this little discussion by saying this is the documents that the board of directors in a company sees. This is where they need to be realizing that this is not about a standalone side thing. This is frontline financial management of the things that matter in a world where the risks are coming at us globally. It is no longer enough to have that narrow vision. So get it into the financial statements so the executives and the board of directors can understand it, and then you're going to win. So we also want to talk about the process of going through it. And so sustainability accounting, to be used in an integrated fashion, has to follow the path of financial accounting. And for most businesses, that's typically a calendar year. And so if you didn't want to do it with a calendar year, you can take our little dials here and spin them around. But if we talk about it in a 12-month cycle, okay, the end of a calendar year financially is not actually the end of the year. It's when you send your 10K reports into the SEC or when you file your taxes. And so what we want to think about here is that if we make sustainability improvements and we want to get them funded by the company, we need a budget for them. There's going to be costs, et cetera. That all has to be reflected in next year's budget, and the leadership needs to know that at the beginning of the year before they start preparing last year's financial statements. So the goal here is to have our sustainability cycle really finished by December, so leadership can then start putting it together to put it into public disclosures that are required. And in the sustainability analysis, that's when often companies discover something, they go, oh my God, this is really important. If it's really important and you put it in your sustainability report, but you don't put it in your 10K and MD&A, management discussion analysis, investors could say that you're not being honest. Yo, you put it over here, but you didn't tell us over here. What's the story? So integrating these is really important for SEC disclosure compliance and conformance across different types of communications. So this is also arranged in a plan, do, check, act cycle, the classic total quality management continuous improvement system. Plan, do, check, act. And I divide it up in terms of months because it's simple and I only have 12 fingers, 10. So beginning with the planning part, leadership and the team have to be created early in the system to get it on deck. And then you start looking through published literature, like the Sustainability Accounting Standards Boards, for your type of business. What are the sustainability factors that matter to investors according to these other parties? So then you can get a list that's specific to your business. If you're a hotel, you get the hotel list. If you're a cement company, you get the cement list. This is for your people and it's about you, not generic. Once you've got those things, you get the team together and you start looking for new information about the 5 major areas we talked about from the Sustainability Accounting Standards Board: environmental, social, human, leadership, and business models and innovation. And remember, they have a tool that gives you metrics for each one of those that you can find out if they matter, and if so, how much. Part of the doing part is to find solutions. And once you get some solution ideas, you got to write them up and a report. The next is the checking section where you can do assurance. And the AICPA has published now guidance and has a certificate training program in assurance of sustainability engagements. This is a huge opportunity for CPAs to have extra work as advisory, helping companies get third-party verification of their output. And that's something that's going to make a big difference for credibility going forward. Finally, in the action part, well, we get back here into impact investing. You're a business, you're going to make changes, you're investing your money, you want to do it in an impactful way, and there's guidance for that. Finally, finishing up that sustainability report to tell everybody what you're doing, and then to put that up to the owners and the business leaders and say, this is where we are today, this is what we recommend. They then say, okay, here we go again around the cycle for another year. I like this approach because it it makes it seem manageable for a team, especially a small business team, and you can take it in pieces. Okay, now we're going to dive into the history, the origins of this stuff. Where did it come from? And why is it why? Well, it began back in 1934 with the SEC. After the Great Depression, they published the Securities and Exchange laws. And the goal there was to make transparency and disclosure mandatory for companies that are seeking public investment. That definition of materiality was critical, and it's still critical today. So what matters? In other words, you need to disclose things that matter to investors. And if it would change their decision and you didn't disclose it, you can be on the hook because you didn't give them information you should have. Jumping fast forward to the 1970s, a huge number of new pollution control and environmental laws came into place, and they started raising the cost of operations of businesses a lot in many sectors. And in fact, a lot of companies went out of business because they couldn't afford to comply with big, expensive pollution control systems. And what happened then was it led to the US government and the federal government and others saying, we need to put a new priority out here. We need to have what we call the US Pollution Prevention Act of 1990, which says don't put expensive stuff at the end of the pipe until you go up the pipe and try to fix it, prevent it with better management and better clean technology. And because it turns out it's usually a lot cheaper to do it that way. That led to to national and state legislation around the country, and to a lot of people like me going out there starting to talk to companies and coming back and saying, oh my God, these people can't do their accounting right. They're getting it wrong. And this became a national phenomenon. It led to the establishment of the Environmental Management Accounting Project and an International Center for Research. And the next thing that happened was the EPA came in and said, well, we're going to write some definitive guidance here. In 1995, they published the first real sustainability accounting guideline. And you can download it. It's in your package. It's called Introduction to Environmental Accounting as a Business Management Tool, Key Concepts and Terms. It's an easy to read, very interesting guide, and it really covers the main new ways of thinking about these issues. And it's for internal accounting. It's really it's a process analysis and improvement and investment guide. It's not about reporting to the rest of the world. Okay, and this is really kicked a lot of things off, but one of the things that really kicked off was the Institute of Management Accountants stood up and said, hey, wait a minute. You can't let EPA run around telling people how to do good accounting. That's our job. So they took the same information, and a little bit more, of course, and they published their own official guidance for the Institute of Management Accountants on how to do environmental management accounting. So that took us up to 1995, and that's where my story sort of jumped in here. I had, after graduate school, got my MBA and my master's in environmental studies. I got hired by the Washington Department of Ecology to help them prepare new environmental management plans for businesses and go out and help the businesses to do this. So I was actually hired as a consultant by the government to help companies write these documents. And I wrote the first environmental management accounting guidance for the state of Washington, and I helped write it for the EPA. And we partnered with the UW School of Business and Boeing to develop case studies. Here's an example of one of the manuals we wrote for marinas. We've got a lot of marinas in Western Washington, and I like marinas because I like boats. But I don't like people polluting the water around marinas because I like clean water. And this is a guide on how to stop doing that. And it's very practical. If you do it right, you save money. Well, we did this for a bunch of sectors. And there we go. Okay, one more slide. And what I learned along with everybody else is bad accounting really is unsustainable, and it's terrible. Because the accounting systems didn't recognize new compliance costs, it distorts internal pricing because certain sections of the business are incurring huge new costs, but those new costs are getting spread across everybody as overhead. And what that does is it makes you subsidize pollution. In other words, the parts of the business that are creating the problem aren't carrying the cost of it. The other parts of the business are. It literally makes pollution subsidized by a company that's doing their accounting wrong. And you can fix that with activity-based costing. And you can fix it with better CapEx analysis. We found that so many companies, even big ones, were using really primitive investment decision-making tools. One page to analyze a $10 million project that you put in front of the boss. And it's just missing a lot of data, a lot of numbers, and they're getting it wrong. And the consequence is they turn down good investments that would protect them and be more sustainable and make them money because they did the math wrong. So first of all, you're subsidizing pollution, then you're rejecting good ideas and investments that would make you more profitable because your math is wrong. They keep saying it's too expensive to change when in fact they don't know better. So this is what really drove a lot of new tool development. And I can't have time today to go into these things, but some of them you'll recognize. Activity-based costing is a well-established accounting tool. And so is discounted cash flow and NPV, even though many people still don't look at it because they don't like to mess with computers. But it's also about risk. And we're going to come to this concept that good accounting, sustainable accounting, is about risk management. And you're going to hear me say that again. So this all led to a bunch of new drivers of sustainability accounting happening over a 30-year period between 95 and 2025. So environmental management accounting was a basis for new social reporting. It was a basis for ranking companies. Did you know the Dow Jones has a sustainability index for companies? They'll tell you who's the best performer in any of a bunch of sectors, and most people don't know that. Carbon accounting followed, and then socially responsible and impact investing was you started following those data. That led to the Sustainability Standards Board and the GRI to start creating standardized metrics because there was too many of them flying around. And it led to materiality standards. And then finally, where we're going, I want to emphasize this part. Sustainable enterprise risk management is the future. When we talk about sustainability, we're talking about managing risks, aren't we? We're getting clobbered in our sustainability right now in our real lives by risks that are coming from China, but they could be coming from anywhere, by risks from the climate, by risks from social unrest, by disrupted supply chains that seem to be secure. And these are sustainability issues, but we have to respond to them business-wise as real risks, and we have to account for them. And so COSO here is an interesting organization. COSO stands for some committee of a bunch of people created about 20 years ago to develop standards for internal regulatory controls to combat fraud. That evolved into risk management controls, and that's where we're going. And COSO has already published a manual on sustainable enterprise risk management, and you should read it. It's in your materials. And when you talk about it this way, you are at the leading edge of the entire field. Sustainability confuses the heck out of people in business, but risk management does not. We're just creating a bigger pool of risk, and it's got to be managed. So this is how we got here. We're now right about here, but we're going to get up to this part, and we'll continue teaching how to do it better. So what are the benefits? Why? Why do all this stuff? Now, this is from the IFAC's International Federation of Accountants' own sustainability framework. This is their model of the business case, that there are three main perspectives on how to identify business. One is the strategic perspective, which is not only your vision and leadership, but also stakeholder engagement. We need to be out there talking to a much bigger group of people than we had to in the past. Integration with risk management. I know I led up to that, didn't I? And supplier engagement. How do you do that? And then the next perspective is operations, internal. How do you get at minimizing unnecessary things? That's critical. That's where environmental management accounting comes into play. Creating reporting systems and reporting on KPIs. KPIs are your material factors. Sorry. And then finally, a reporting perspective. And that shows you how to communicate both internally and also externally, both to investors and to a broader scale of stakeholder groups. So IFAC has put these together as check marks that you can learn about, just to say, let's go through to any client, sit down and say, let's go through these one by one and see how you feel about this benefit. Would you care? For example, maybe the small business says, I don't care about reporting to investors. I don't have any. Well, do you care about reporting to your banker? Well, of course. But I don't have to, do I? Well, if you want a better deal on loan rates, maybe that would help. They'd say, oh, good, you're managing risk better. So it's a great checklist to use for what do people want to get out of this whole thing. So now we're going to talk about sustainability accounting today, and that is the landscape and who are the big players and what are they offering and how do we use it in a very fast overflight. And we're halfway through our show, by the way. That's busy, isn't it? So there are four major players today in the accounting for sustainability space. And so the first one we've already talked about, the International Federation of Accountants. Now, again, all the national associations around the world belong to this organization. Well, there's probably a few that don't. It's a big world. But the ones we care about do. And so they have all published, well, many of them have published guidelines, but they all turn to IFAC. And the IFAC has a sustainability program, and they're now partnering aggressively with a bunch of other people to update all their information. So you want to go onto the IFAC website and study it, see what these people are doing, because they're bringing in the best of the best from Europe and the UK and Australia and even China now. The Chinese leadership is very worried about sustainability because to them it means political unrest, risk management. And they're encouraging sustainability in their business and coming up with very interesting solutions. So this is a global effort, starts here. Now, to get more into the process of creating sustainability accounting, this is the field of Accounting for Sustainability UK. So they have developed guidelines for implementing what I'm calling SA processes and teams. How do you get people on board? How do you move it ahead? How do you mature the organization and the finance function so that this all becomes an ordinary part of the day? It's not a standalone thing behind a green wall where someone's running around telling everybody what they're doing wrong. No, that's not the goal. Remember, we don't want to have a sustainability system. We want to have a management system that also includes sustainability. So A4S is where you go to learn sort of the people part of it all. Then in terms of what to measure, the accounting hardware, okay, we have the Sustainability Accounting Standards Board, and we have also the Global Reporting Initiative. So again, there's a sort of a process. You learn the big picture from the accounting perspective, learn the growth of the discipline, learn what you got to measure, and then ask yourself, do we have to measure more because maybe we have a weird thing? I'll give you an example. In the restaurant business, air quality is not normally a problem, except if you have a pizza chain. Pizza ovens are regulated because they put out so much smoke, so much emissions. And so if you're a pizza chain, you better worry about air quality, even if it doesn't show up in this bunch of standards. You got to look at reality and be realistic about yourself. So let's dive in a little bit. So starting with IFAC, okay, they published in 2005 an update of the IMA's publication from 10 years earlier on the same topic. And in this one, they again took a more holistic approach to it. They founded it on the EPA and IMA documents, but then they started getting more into a bigger, more general flow approach. And so this really talks about how to use the flow of materials through an organization to get at the meat and bolt of impact, the stuff that really causes a problem, like waste in the water or smoke in the air or toxics in the staff. And they also talk about how to measure these costs and earnings a much better, more sophisticated way. And they have a lot of examples. This is partly why I really like this document, because it really shows how companies are actually implementing it. That's, of course, in your download pile. And there's some related ones that we've included because they help with understanding how to do internal investments. So you don't turn down a good idea because you did your math wrong. And God, that helps people. That happens so much. Our world would be so much healthier today if this was not a problem. Bad math in investment decisions. So they also produced the Sustainability Reporting Framework, which I mentioned earlier. Okay, it has its foundations in some earlier work done primarily in 2003 in the UK, which helped start the accounting for sustainability thing. They have these three perspectives on strategy, operating, and reporting. And the neat thing about this is fabulous. For each of the many elements, like 50 things in there, they specifically say, here are key considerations for professional accountants. This is what you need to do, what you need to help out with. It's brilliant. There's nothing else really like it, actually. And that's why you want to get this document and look through it. It is literally a recipe, step by step, for you help others be more sustainable. And you do it by being a better accountant, not by being a sustainability expert. So how do you use IFAC? Well, first of all, start with the EMA guides. Okay, that's the basis. And that's, by the way, that's where most external stakeholders really care. Are you polluting us? Are you hurting us? Social and natural capital is also of interest, but not the same way. It's all about investing. Environmental management accounting is about impact investing internally, solving problems with good math and using good impact investing principles. Read the framework and take your time with this. This is 195 pages, folks. It's not a small thing. You sit down for a half a day and learn about it, and then use it coming back. So here's a hot tip. Because this is a big book, it turns out 196 pages of regular paper. What I did is I sent the PDF out to a binding service. They just printed it out and they sent me the thing back and with comb binding on it. And it's a big document. It weighs about a pound. And I like to think of this as when I'm going to meet with somebody, I can go up to them and take this document and drop it on the desk and say, I read this so you don't have to, but this is what we're going to do. And it's a very good demonstration that A, there is a resource, B, there is authority, and C, there is a recipe. And it weighs a lot, so it makes a lot of noise when it lands on the desk. It gets their attention. Now we're going to talk about the Accounting for Sustainability Project. This was created in 2003 by Prince Charles, of the UK. And his goal was to try to integrate sustainability into the finance sector in general and into financial management of business specifically. Accounting is, of course, critical to that, but leadership is a big part as well. So in their system, what they've covered is leadership and operations and transformation and how to use all that to get more money, access finance. And what they've done is they've prepared a series of essential guides that are how to do it books, as well as holding a lot of forums and webinars and training events. And they're very active right now to this day. They're having events next week. And you can take them for free online. And all you have to do is go to the website and look around. And here's an example of one of the things they've done. This is a maturity map. So here the subject is sustainability factors integrating into strategic planning, budgeting, and forecasting. How do you do that? So the first stage, of course, is we're not doing it. But what are the indications that we're not doing it? And how do you measure that? And how do you set a baseline? What's the baseline compared to what? At an intermediate stage, the organization's growing its proficiency. And at an advanced stage, it's integrated. It's not a different thing anymore. It's been brought into the family and it's all part of it. And we wear it with our clothes every day. So they do this for all of the guides, showing step by step how to evolve an organization's finance function along in order to move the ball ahead. And they don't get into the technical metrics. That's not their job. Their job is on the process and the leadership potential. And this is where you, as an accountant, are best off, said usually as a CPA advisor to business, this is where you're best off adding value because you're not really going to be sitting in the business, measuring their water flow. That's what their team does. But you can show them how their team can evolve and get better, always holding this stage, integration up. That's the signpost. That's where we want to go. When you know where you want to go, you can figure out a way to get there. And this is great for eliminating that confusion that surrounds sustainability in general. I have to say that when I went back and did my homework on this, I was just delighted to find all this stuff because it's been hard for me as an expert in the field, so to speak, just to explain what it means to an average person, but I know how now. So how do you do it? So this is with A4S rather. Number one, study their website. Go to the whole thing and look it over well because they're doing a ton of really interesting things. And one of them is that they're starting to expand their network to the USA. They have a CFO leadership group that just started. It's open to others, and it's open to CPAs that want to participate. And this is brand new, folks, and you can tell it's important. And if anybody gets good at it, they can find a big audience to listen to them and possibly buy services from them. Okay, think about it as a CFO. The A4S is developed really for CFOs. So pretend you're the CFO. It might be a goal of yours, in fact. So if you do, that'll help you understand better the mental framework to bring together using these tools. You want to go through the essential needs. You may not want to read them all in detail, but that's really the job of the client. But you need to know where they are and what's in them so you can point at the right pages at the right time. And here's a hot tip too. Two of the guides are really unique and they're fantastic. One is called Engaging the Board, and this could also be the owners of the company. But it's not about getting into the weeds. It's about getting these people to understand why to do this, and that's just so critical. The other one is on debt finance and treasury management, and that's a unique document that hasn't been replicated anywhere else. And I think it's fascinating. If I was a CFO and I was dealing with, borrowing money in the capital markets, I would be all over this like a dog on bacon, fast. So that's how to use that one. And then the final one, well, here's an example of, I wanted to share this with you because it's kind of confusing. So social and human capital is a thing that we're talking about here, but it's new to everybody, really. So, but here's the examples in this page that are examples of what you can measure. I'm not going to read them off to you here because we're short on time for that kind of thing. But literally, this is a checklist you can use with a client to sit down and say, these are things that we might not want to worry about. And if you pick one of them, there's guidance for that already published, okay? So you're a navigator helping people figure out where to go look for the things for the signposts. That's the way to think about it. You're showing them the signposts to success. So now the final of the third of the big four is the Sustainability Accounting Standards Board. And I mentioned that very briefly, but well, so their focus is on what's material to investors. What do investors want to know about sustainability in an organization? And so at SASB said, okay, what are we accounting for? And make it practical. It was designed from the beginning to encourage conformance with SEC materiality reporting in a 10K and an MD&A discussion. An MD&A, management discussion and analysis, is where you're going to talk about environmental disruptions to the supply chain. Oh gosh, the sea level went up and it cut off all the trains that are bringing our necessary ingredients to us. All right, so it shows why they're doing it. And so if you get pushback from somebody, you can say, look, this is designed to help with SEC reporting. It'll probably help you. So another factor here is not an accountancy organization. They do not do accounting. They develop metrics for measuring sustainability elements. But it's not an accounting group. It's a private nonprofit. It's not regulated itself. They're not following anybody else's rules. They're just saying this is what we think. But because they're making a lot of sense and their process is very rigorous, it's being used more and more, and by more than half of the Fortune 1000 at this point. And so the standards are for material and they're sector specific, so you can compare competitors. And that's what you really want to know. How good am I doing relative to that guy? If you say, I used 1,000 pounds of water per barrel of beer, I don't know as an investor if that means anything. I want to know if it's more or less than the other guy. And are you doing better over time? So it really is about making the metrics normalized, useful, and relevant, and comparable. So the neatest thing that SASB's done besides the elements, and this is a fun tool and I encourage you to try it out right away, on their website at sasb.org is their materiality map. And this is a web-based tool to identify really fast the things that matter in a specific sector. So it begins as a page that looks like this. You have a list of the SASB sustainability elements, and up here you have a bar, and it's all originally black. And it contains 1, 2, 3, 4, there's 5, actually there's 6 of them, 6 major categories of sectors. And if you click on one of them, it expands and it shows you subsectors. And here we've done that for food. And here you see a bunch of different related sectors. And here's restaurants. And what this matrix shows us is that for restaurants, which of these factors are relevant to their accounting? And if it's in black, it's important. If it's in gray, it's medium important. And so when you click on one of those black boxes, up come the metrics themselves. And it says, for example, on food safety, the accounting metric is how many people got sick, what percentage of people got sick, what number of compliance violations did we have. Every single box on this massive matrix has metrics in it. It is really interesting because it teaches you really fast about what's going on in a business sector, even if you didn't know about it. If somebody said, okay, we make polyethylene, you might go, I don't know about that, but that means you're a chemical company. Right, oh, that's a chemical, oh, okay, we're gonna look up your metrics. It's that fast. And then if you do decide to look at those, every one of these is in a separate document that you can download, and it shows you specifically how to do it. And so this is a way I, as a consultant and as an advisor, can advise anybody in any sector of the 77, preparing myself for that first meeting where I can go in, I can say, these are the issues investors apparently care about. Would you like to talk about them? And they say, how do you know that? And I can tell them a story. And it's not about me being the expert, it's about letting the accounting associations and organizations be expert. So how to use SASB? Study the site. Again, there's a lot going on there. The materiality map is fabulous. You can find your sectors by using another lookup tool. Download the standards for those sectors and use them. If you have a client that's in the hotel business, download the sector standards and give them to them and say, this is real. We're going to work on this. And then review the sector metrics with the client for, are they relevant? Are they meaningful? Do you care? Should you care? And ask if external reporting on them is helpful. Is it advantageous to make an external report? Maybe it's not. Certainly it's work, so don't do work if nobody really cares. Enough. They have to care enough. Let's put it that way. You can get a pat on the back, but would it make them stop buying your products if you didn't publish it? Maybe not. So. And if you want to be an expert in the SASB system, they offer an actual certification course. It's pretty heavy duty, and you get a certificate as a sustainability accounting analyst, a certified analyst in sustainability accounting. I took the class myself and passed it in June, and and it's work. It's a serious certification course, and it's fabulously interesting. It's a fascinating opportunity to learn more, and you get a valuable certificate to advance your professional credibility. Okay, the last of the big four, and we're getting close, is the Global Reporting Initiative. And so they are another standard setting organization from 2000 that was created to produce a general set of standards beyond just what investors care about. So this is an effort done partly with the United Nations and consultation with groups all over the entire world. It took them years to do this. And they have now produced standards that are for a wide range of sectors. And not for sectors, but for environmental sustainability issues. So they have general standards that apply to general management, kind of like an ISO 9000 approach. And then they have for various types of issues, a bunch of downloadable, very technical specific standards. So for example, if the subject's air pollution, they have several standards technically about that. And they're totally different than the water pollution ones. You get the point. Now, so that's one of the first places you go to find more about the industry you care about. But the next thing is to not spend your time digging into all of them. Find out the ones that are material and useful to your client first. And learn about how to use those. And then later on, when another client in a different sector pops up, you can help them quick. So the sustainability disclosure base is very cool. This is how to find the gossip, the inside info, not so much inside, but the info from the competition and the leaders in any sector. The sustainability disclosure base has over 16,000 sustainability reports from companies all over the world, and you can sort it by sector and by industry and by location. Pretty slick. I decided to look for auto companies in North America. And I discovered that there are some, I'm squinting here at my tiny slide, but there's a bunch of them. And here's a Honda, and here's Harley Davidson. And look, they've published sustainability reports, and I can click on any of those buttons and I can download it. And then I know what these car companies, these vehicle companies are doing. And that becomes to me an education tool for my client. I say, well, you're in the car business. Don't you want to know what Honda's doing to be sustainable? They wrote it down right here. Show this to your clients when you're trying to sell a car. They go, oh, that's kind of cool. I didn't know they even did that. Right, it's free, it's downloadable. You know where the information is. You can be the guide to your clients improving their sustainability. And there's so much in here. And so again, you want to take the time to explore this website and learn more about it. So here's an example of Nordstrom's own sustainability report. So using the Global Reporting Initiative standards, here are Washington state organizations that have done it. And there's a nice handful of business, also some, even the city of Issaquah and Sound Transit, but also some names you probably recognize. And so here are the metrics Nordstrom's cares about. I don't have to read them to you. You can go back and look, but they've gone through the process. What is it that matters to us? How do we measure it? Who's going to do it? How does it become normal in our system? And this is the same others are trying to do now too. All right, so the GRI, again, identify your sector, use the SASB to identify the material metrics. Then look at the GRI standards to see, are there any that are relevant that are not in SASB, but maybe we should use them for this particular client? Okay, then search the disclosure database to say, okay, well, let's learn about people in that client sector who have already done it. Let's see what they're doing. Let's benchmark. And then review it and identify the reports that are most relevant to the client so you can show them. Come in with a couple examples, not a stack. Nobody wants to see your stack. 2 or 3 examples that are as analogous as you can get, and sit down with them and review it and have that discussion, because that's how they'll understand that it's real as a competitive factor. Now here we're to the end of the main content of this section, and we're 10 minutes away from closure. So part 3 and part 4, I'm not going to cover now. I'm just going to jump to the final conclusion. What should you do next, you personally? And I'm going to skip over a whole bunch of stuff. So you're just going to have to excuse me while I jump through this because there's all these transitions. But what we're doing is in the next class, I'll be outlining all of these slides again and walking through a plan, do, check, act cycle, how to do it, what are the references, etc. So I think it's really valuable for you to come back and sit in with this on the next version, because this is where you're going to, right now you have a toolkit with a bunch of drawers with labels on it, but no tools. We want to fill that thing up with the hardware you need, where you're updating the chart of accounts, you're using the tools to identify the metrics, you're acting to invest in the right way, using the right kinds of tools, CapEx, etc. And I've got to do this really quick so poor Nick doesn't say, you're teaching them too much and they can't get extra credit for it. What can you do step by step? And that will be done. So two different perspectives. I'm going to just put these up fast. This is the big company perspective, really, because it does include the question of should you do public reporting or not. For big companies, the answer is probably yes, because people look at you now and go, what's wrong with you if you don't? I mean, are you hiding something? How come all the other big companies in your sector, I have their sustainability reports, where's yours? Are you not competent? Okay, no, if you're trying to borrow money from somebody, you don't want them to talk to you like that. So step by step, plan yourself. Do a plan, do, check, act thing. So learn the fundamentals. Help pitch the vision. Show people where they're going. That's where the accounting for sustainability maps, the maturity maps are helpful. Where are we going to go? What do we want to be when we grow up? Help them find the material metrics and organize the team. Work them through the process using the IFAC sustainability framework. The more you can refer to the published guidelines, the smarter you look. You know where they are, you're the accountant. Discuss with them about how to do assurance. It may not be necessary or desirable even, but it may be a very valuable way to improve internal control, in which case it's part of that plan, do, check, act improvement cycle. So finally, doing the action, you've got to look at your proposals and then make proposals to make investment budget decisions and ask for money. You got to spend money to do it right. And so you want to get that in a form that the leadership can respond to and do it in time by January so they can incorporate it before they have to file their public reports if they need to. Now, if you're looking at small business, I've got to say my own CPA, and unfortunately she couldn't attend today, but I went over this with her. She said, Bert, I don't care all about that stuff. I have a whole bunch of small business clients. They're all busy. They're all yelling for help. I need to give them something useful to do in 10 minutes. So, okay, Amanda, this is for you. It's much the same concept, okay? It's still about, you got to work through a management improvement process. That's just necessary. But you're a small business. Let's make it as simple as possible. So find the material metrics and the sector reports. That's your job. You can look them up. then sit down and go over them with the client and just see, does this matter? Do you care? Do you think it's going to be an issue in the future? How would you know? So think about the benefits of doing the work to improve. And then the next thing on the do part, you've got to work with the staff, because if you're the CPA, to the staff there, you're the closest they'll ever get to an outside financial expert helping the company. But if you're standing there as a CPA side by side with the boss talking to the staff, this all looks better. And so they're going to need to do the nuts and bolts work. So you got to teach them how to use the tools and help get them on board with the vision. And later on in the second half, we teach how to talk with the employees about sustainability, because if you use the wrong words, they don't care. You got to update the chart of accounts. Remember, it doesn't matter how small the business is. They've got a P&L, they got a balance sheet. If they're not seeing useful data in those documents, it's probably not happening. So it's your job to try to make this normalized. So checking, summarize their findings, review, help with write it up, some kind of a write-up, so people can feel like that's what we do. And then finally, the action, again, help make sure they don't do their math wrong. Make sure they analyze investments properly. Don't reject good things and say that's too expensive and just be wrong about that. And then help produce a final report that they can use internally or externally, and then start all over again, ready for next year. Small business is not really different than big business once you're trying to set in place the key controls. Okay, so the next thing we're going to be doing is more CPE in the future on these topics. I won't go into them, but we are going to be seeking Washington CPA advisors and Washington case studies. And I hope that you'll follow up with us, because you could be a great resource for making this a better product and the society more powerful. So we're ready for some Q&A, and I'll come back to just a second and tee up your questions should you have them. I'm going to show also that we have, say thank you to as well. We've got my email here should you have any questions. Our website, Sustainability CPE, is up and running as of Monday. Yay me, I had to learn how to use Wix. And it's almost perfect, not quite. But it has on it the catalog of our 125 downloadable free sustainable accounting publications that you can download as a spreadsheet. And there you go. That's your reference list for the next 10 years. I'm also on LinkedIn, and you can reach me there. I hope to connect with you. And if you do reach out, I will certainly respond and look forward to hearing from you. So back to Q&A. Nick, I hope we can still fit that in a minute or two.
Sure. So I do want to have a quick note for those of you who have really tight schedules. At this point, we've reached the end of the regular CPE portion. So if you wouldn't mind taking the evaluation link, which is where the attendance verification pod, if you just click evaluation link and click browse to below, will be, it'll only take a couple minutes. And as Bert noted, this feedback is invaluable to us in planning future events. So we really appreciate whatever you think. Please let us know, not just for the prefix, but for Bert's classes as well. I also want to note that in the chat, I did put a link to the supplementary companion course to this one in our catalog. So you just have to click there and you'll be able to see it in our catalog. It does look like we had a question come in. What percentage of companies are presently even doing this kind of review?
Well, according to the Sustainable Accounting Standards Board, more than half of the Fortune 1000 public companies are actively using SASB standards. They know that because they license the standards to the big companies that can pay for it. At a global level, I just saw a stat that the global 250 largest corporations in the world, 200, something like 75% of them have published regular sustainability reports. Getting down into smaller businesses, obviously there's still a huge lack of awareness of it. So if you're talking about, businesses with less than, 20 people, hardly anybody. But that's a proportional thing. When we say hardly, it's, comparing, out of a population of 4 million small businesses in North America and Western Europe, which are more ahead on this, out of 4 million, maybe 50,000, 70,000, 100,000. The interesting point to remember is that you can find out who's publishing, and including if they're small businesses, in that sustainability reporting database. Now, there are several other similar databases. So if you do a Google search for just database of social responsibility reports or sustainability reports, you'll find 3 or 4 other major information sources. So it's still very uncommon at the small level. At the large level, it's becoming mandatory, and all of the big accounting companies are now offering it as a practice. The medium-sized accounting companies are starting to create the practices now because the demand is going through the roof. And the demand for education and how to do this is critical. And one way that anybody who's in a CPA can add real value and possibly make some personal benefit and financial benefit out of it, if any of the clients you have somebody, ask all your clients, ask them all, do you have somebody whose job is to try to make us more sustainable, like our sustainability? They say yes. They will say yes. Many, many do now. And then you talk to those person and they say, well, I'm not quite sure what to do yet. And I'm doing it all by myself. And that's the normal state of improvement in small business, right? But if you point out to them that they can get their own bookkeepers and their own accountants and other people's trained in sustainability and take the same class you're going to take, this one, you're all on the same page. And now you know what to do, and they can get their other accountants to help them out. So it's not hard to think of scaling this up to a lot of people, a lot of companies using it, if we can get CPAs out there pushing the word. Because if the CPAs of the world understand this, the C-suite and the bosses will eventually understand it too. That's how we're going to make capitalism think sustainability.
Fantastic. A follow-up question to that one. Is there any analysis of how companies that are doing this review are doing compared to companies that aren't?
Absolutely. That's the field of impact investing, and there's a ton of publications out there. But I'll give you a very interesting analysis. BlackRock Investing, the world's biggest private investment company, a year ago released a press release saying we're going to apply sustainability criteria to every single investment we have and everything we do in the future. The same is true of Goldman Sachs. The same is true of all the big investment companies. That's what we call impact investing. And they're using it, you bet. And they're using it to make financial decisions because their own statistics show companies that treat sustainability and ESG, environment, social governance, as a risk management and business improvement lens to, how are we looking at this thing? It's a new set of lenses. And when you use new lenses, you see new things and you can improve stuff you didn't even know you had to improve. And it reduces risk. So there's a tremendous amount of evidence out there that you make more money by investing in companies that do this well. And the simple reason is they have a broader field of view. They're thinking long term. They're thinking process and management and communication improvement. And they're also thinking continuous improvement. So the evidence is clear. Companies that are doing better in this with this topic make more money. And you can just look at any of the major banks or investment funds out there writing about it. So have KPMG and Deloitte and Morgan Stanley. They're all publishing. The evidence is in. This actually makes more money. And it's because it's actually an analog for better management, period. And using better new technologies because you realize you can afford it if you do your math right. So I hope that helps you. The evidence is there. That's the key thing.
Fantastic. All right, I'm not seeing any other questions coming in. Thank you very much for staying late, Bert, and the 42 I still see on the line, so to speak. I'm going to shut the meeting down in a minute here. Do you have any last thing you'd like to leave us with today, Bert, before I shut things down?
Well, sure. This is to everybody that's listening. We started this new Sustainability CPE company literally only 2 months ago. It got incorporated. And so I'm building the company to work to create a whole education business online, on demand, that's relevant to the world. But we need to start somewhere, and we're going to start with Washington State experts and companies and case studies. And if you'd like to come along for the journey and help out in any way, let me know. If you have clients that you'd like to take a test run at with this and want someone to be a wingman, call me. I'm happy to join a Zoom call and talk with a client about things they care about. our goal here is to stay in Washington with the CPA Society and build this out with a lot of feedback so that when we go national, it's excellent. And I hope you'll join us. Come to Sustainability CPE. You'll see a tab that says participate, and you're welcome to join the journey.
Fantastic. Thank you very much, Bert. Thank you all for attending. Have a safe and restful weekend, everybody.
Happy hour, everybody. Tell them what you know.
Bye, everybody.
Thanks.